different mediums. Brandon Chapman was not aware that we were about to broadcast, so we just axed him. It was great. Just axed them all at once. Excellent. So again, where is everybody actually joining us from today? Eh, City, state, country, which side of the world? Only here in the U.S. do we actually mention city and state. Sorry, we're trading in another account over here. All right. Who's from the furthest distance from us? I am always kind of curious in here. So Germany. All right. Awesome. Thailand. All right. Right now we have winner winner chicken dinner on that one. So no, I have an account open that Gianni De Poce is actually trading one of the accounts that I'm actually in at the same time. So yeah, we are packed in here. Canada. We're in Canada. Let's get some specifics in here. Iceland, the other US, you mean? All right. Supposed to be Greenland, but no, Iceland, Greenland, difference. Okay. Me personally, rather Iceland. I look forward actually to visiting there. Awesome. So I'm going to start with just a couple of brief informalities here. By the way, I'm broadcasting today from Paradise Valley, which is a little town in Scottsdale, Arizona. I'm out of here in a couple of weeks again. I go back to the Virgin Islands. I kind of jump back and forth. My kids are actually finishing up school here in Arizona. It's getting hot. I got to get out of here. I got to get out of here. So once again, today's marketplace. What do we got? S&P is up 100. What's 2% amongst friends? The only way to really describe the this trading week, okay, it's still manic. It might be to the upside, but I'll remind everybody on Monday looked pretty dismal on Monday. Tuesday we got back to even. Wednesday hit the upper edge of the expected move. Where are we today? We're right where we were peaking out yesterday. Um, Really intense, almost like wild, trade over the last again 3 weeks. And actually, we're going to talk a little bit about some of that wild nature of the beast. Can I tell you guys one really odd thing though in here? So I always like to start a little bit slowly, get everybody kind of acquainted with things, right? But one odd thing, if you look at the screen, just look at my screen, like what's like one of the odd you know, I guess the odd product out. Let's see if anybody actually picks up on this. This is not, by the way, this is not trading 101 by any stretch of the imagination. What looks a little weird on the screen? With the S&Ps up almost 2%. Anybody? Okay, anybody. All right. I like it. People are actually they're getting it. So it's kind of quiet though when I do ask this because it's like I don't know what is that. I'll tell you exactly what looks odd to me. It's not, by the way, I'm not looking even at the chart. I'm just looking over here. Okay, what looks odd? So, the bond market's up. Good. Okay, the bond market's up. The S&Ps are up. The volatility is not really falling. Not falling. Like if you're looking at the VIX, you're doing yourself just a huge disservice. The VIX, I mean, you can look at the VIX and you can see that the move down to the VIX, oh, it's a move down to the VIX. The volatility is not falling nearly as much as the market might be rallying. And it's kind of like the marketplace, it can't exhale. Like I was trying to explain this a little bit this morning. It's like, it can't exhale. It can't take that deep breath that it wants to. The volatility is still kind of like resonating in there. There's there's a high intensity, even the rally, which if you have been around this business for a while, like that doesn't make you feel good. Like what you want to see is a rally and then the volatility collapses and everybody goes, cool, everything is going to be all right, man. And yet that's not actually what we're seeing in this marketplace. So, all right, I figured I'd mention that right off the bat. Again, a few informalities. So I appreciate everybody actually chiming in right now, letting us know that where you guys are from. It's always kind of cool to actually see that, and people literally join us from like all over the world in here. We've got Iceland, we've got Germany, we've got Thailand represented. I thought I saw Singapore in there too. Pretty cool. So this presentation today. You can ask questions. I'm reading chat in real time over here. People always ask me to if this is live. This is live. I just showed you a live market. It doesn't get much more live than this. And we're not delayed at all. We're like literally you're on the second, seeing this the exact same time I'm actually on here. So it's okay. Um, the trade in here, okay, that we're going to be discussing, I will actually trade a few of these live with you. So I will absolutely trade live throughout the course of today's session. You're welcome to join in the fun or not, depending upon your knowledge, your skill set. Again, ask questions throughout, and if I don't catch them during the session, I'll hit them afterwards. So my name is Don Kaufman. Okay, this earnings season, discover the one, the true money number. I'm actually going to explain exactly what that money number happens to be here momentarily. The risk disclosure. We're not financial advisors, nor a broker dealer. I often mention this. I spent a significant amount of my career both in market making and on the brokerage side of the business. Contest. Copyright disclaimer. This is mine. This is not yours. Look, one of the reasons I throw this up here, if you need to get a hold of me after today, obviously you guys can call, but you can always hit us at support@theotrade.com. Support@theotrade.com. We use a common inbox. Just put Don or Don Kaufman in the subject. It'll go directly to me. More than happy to be able to answer questions after today. Anything. Okay. And we answer trade related questions. All right. So I'm going to give you guys the I guess nickel tour. There are some people that are joining today that have no idea what a TheoTrade or a Don Kaufman is, and I'll give you a little bit of the origins of both TheoTrade and myself. I often start with everybody has a story about how they got involved, like in trading. Like everybody has this like story, like there was like I was a school teacher and then I was a trader, or I was a taxi cab driver. I don't even have those anymore. Uber driver, and then I was a trader, whatever it may be. um, I don't have that story. I grew up around it. So I literally grew up, okay, in a family that had traders in it. And a lot of my family traded at the Chicago Board Options Exchange. They started a firm in the 1970s. It was called O'Connor and Associates. O'Connor and Associates is not our family name, but the two brothers, the O'Connor brothers, actually financed the firm. My uncle happened to be the founder of O'Connor and Associates, and it was hailed in the 1970s, biggest, baddest trading firm pretty much in Chicago. They had actually at one time owned over 500 seats on exchanges around the world. The company was eventually sold to the Swiss bank, and it's still one of the driving forces behind UBS. So I grew up in it. Now, that's how I kind of got involved in trading. I had no intentions of going into trading. I did not do a degree in business. Far from it. I did a degree in hard sciences. You want fries with that? So I grew up in it. In the late 90s, I started trading in Chicago. And a short time after that, I had a buddy that I was trading with that introduced me, okay, to a gentleman by the name of Tom Sosnoff. Tom actually traded in the OEX pit. I was actually working right next door, and we met. We kind of hit it off. I was all of 23 years old, and Tom said, "Hey, we're starting a brokerage firm, and why don't you come with us? It's not ready yet, but in about a year, you can come with us, and you can actually run a division of the company." And I was like, okay. I was like 23 years old when I officially joined Thinkorswim. I was 24 years old. By the ripe old age of 25, I was an executive at Thinkorswim. By 26, I was actually hosting some of the board meetings there. It's pretty wild. And by 28 years old, I was actually helping take the company public. So we took the company public by 2007. The company had actually sold a few $100 million. We took in Technology Crossover Ventures, which was actually one of our primary financiers of Thinkorswim. The company was then purchased by TD Ameritrade in none other than 2009. They scooped us to the bottom of the market. The deal was worth close to $700 million. By the way, $700 million, for those of you don't remember it. They actually used to be a lot of money. Did extremely well in that one. But with TD Ameritrade, when they bought us in 2009, I signed a 5-year lockup clause. So I had 5 years where I basically had to sit at TD Ameritrade, and I ran a division. We had 768 people in our division. We ran the education and helped educate what at the time was 7 million clients of none other than, of course, TD Ameritrade. And during my entire tenure, both at Thinkorswim and TD Ameritrade, I got to see everything you did. Ran a whole division of the thing. I got to see everything that you did. And that means like I could type into your account, what is Mike doing today? Okay. We didn't really do that. We actually studied order flow for the better part of 15 years. Probably the most insightful aspect of my entire career in the brokerage side of the business. We knew everything that you do. In 2015, my lockup clause ended. I left TD Ameritrade one day after the lockup clause ended. With me, I took, most of the education division, including Jeff Bierman, Brandon Chapman, Blake Young. These are all individuals that, helped actually run most of TD Ameritrade and Thinkorswim's education division. In fact, Jeff Bierman, okay, for those of you that have ever been on Thinkorswim, Jeff Bierman actually built most of the chart studies. Okay, literally, that guy built over 1/3 of all the charting studies on the Thinkorswim charting application. This and scanning reported right through my group. So we built a lot of the technology in here. My forte has always been analytics. That's some of the Analyze tab, of course, the Thinkorswim platform. I do trade on Thinkorswim still, but I also still trade on Tasty. Okay, so I kind of toggle back and forth a little bit. So it's whatever you're comfortable with out there. But I wanted to give you guys a little background. What you're going to watch specifically today comes from having watched billions in order flow, billions of others' mistakes, and what really works best specifically for the retail client. So let's get down to business over here. Earnings. So earnings. It's earnings season. It's just kind of really starting to get into the flow this week. And it's been a funky marketplace, like funky marketplace. So this week has really, for the first time, kind of kicked in to high gear. What I mean by that is like a lot of the earnings that are coming out, it's much more, some of the preeminent companies. Like I don't like talking about like JP Morgan and stuff, take a couple of shots here and there, but kind of kicked into high gear this week. Last night I did place a couple of earnings trades. It ain't over till it's over too. I'm actually kind of excited about a few of those, but there's so many like myths about earnings that I got to get through it. I just have to get through it because people constantly hear earnings are scary. Earnings are wildly volatile. You shouldn't trade earnings. You can't trade earnings successfully. Okay. Analyst estimates can distract you from the real opportunities, okay, of earnings season. I actually want to throw that one out there because the analysts, you get some guy on there and look, they don't do anything. You realize that analysts are not, they're barred from actually placing any real trades in the marketplace. Is that who you want giving you information? Okay. I've analyzed everything. I can't trade it, but I've analyzed it. Excuse me. If you don't have skin in the game, it's over. And people constantly like, well, you should wait to after earnings. You should step out of existing trades around earnings. Anybody ever done that one? You pull off a position right before earnings, and then of course the stock shoots up. You're like, son of a. But then the next time you leave something on for earnings and that stock goes down, you're like, son of a. You can't do anything right. You should just buy high flying stocks ahead of earnings. You should ride out earnings, hope for the best. There are more myths about earnings and earnings related trades than I could possibly even come up with. But I was actually having fun with this. And I was having fun with this because, again, there's more myths about earnings than anything else in this business that I can think of, like bar none. So don't believe a lot of the earnings like lies. And they're just that. Okay. I want to start with I do not care. I don't care one way or the other. I will detail the strategy today too. I don't care if the earnings are good or bad. I just don't care. In fact, we're going to have fun today. I am going to trade, okay, based on you. You're going to tell me what to do. We'll use a consensus. We have a lot of people on today. We're going to use a consensus. That way, if I'm wrong, I'm going to blame you. Tomorrow, I'm going to blame you. We're going to trade. We're going to trade some earnings today. Is that all right with everybody? Look, I don't care if the earnings are good or bad. I don't need to know how the market's going to react. No one's going to predict that stuff. It's so ridiculous. People are like, but Apple in its quarter, and then China, and then they did this, and then but it matters on deliveries, but maybe they have a flip phone in September, so that might actually help. Do you actually believe any of this crap? Do you even believe it matters? We're one tweet away from being up 100 or down 200. And you know that better than anybody right now. I don't care what the institutions expect. Okay. Expect nothing, and that's exactly what you will get. You're going to use criteria. You're going to use my criteria to know which are the right opportunities and which ones are the traps. And we're going to talk specifically about that. Before I even get any deeper into this, I got to tell you something. It is imperative, okay, that you decouple yourself, okay, from all the market chaos. Like right now, I even started with this. It's kind of ironic. I started with this when I talk about like decoupling from market chaos. You want to see what market chaos is? Let me pull up the spiders. This is the S&P. I was down, I was up. I was so down until I was up. I'm back up, but I could be back down. Okay. You got to let that go. What we're going to talk about there's no bearing on what the markets are doing right now. It does not matter. I'm going to say that again. It does not matter. The market chaos has got everybody like on edge. Okay. You've probably consumed more caffeine in the last 3 weeks than you have in the preceding 3 years. I'm in that camp. Anybody else in that camp? It's good stuff. You got to decouple. You got to let it go. Stop thinking about what you think Google is going to do. We're going to talk about Google in a minute. I promise you, we're going to talk about Google. Okay. Follow my earnings flip criteria. Okay. We're going to talk about earnings flips. The money number, the cornerstone, okay, of my criteria regarding earnings is a simple, okay, all important number. And I'm going to show you. I'm going to share with you why I care about the number. And the number is the only thing that cares. And that makes me care about the earnings. Like the earnings are esoteric. I don't care, what Elon Musk said on a conference call the other day. Like I literally don't care. By the way, I did actually trade the Tesla earnings though. I did trade the Tesla earnings. I don't care. It doesn't matter. Okay. It's all that matters. Okay. Is this money number. So we're going to get into how knowing this number, it's going to change the way at earnings season, like that you're going to view this market forever. And it's literally going to change the way that you approach anything regarding earnings and allow you to cut through noise and locate really viable opportunities that they just totally miss it. Okay. I mean, what's cool about it is this number, the opportunity is like clockwork. When you think about strategies, like when you guys are going to enter into a market, like any marketplace, you have to think about like what's the MACD and the Fibonacci and the Bollinger Band. Like, you have to have the perfect setup and your timing is important. You realize all that's out the window. This is earnings. What other strategy allows you to know days, weeks, even months in advance? Like you knew earnings were coming this week, next week. Next week is actually really picking up. Next week is kind of like, the most pivotal week. But the point that I'm trying to make is the opportunity that we're about to present here in earnings, okay, is a setup that you're like, yeah, I'm a little busy this week. Okay, so you're a little busy this week. And you know that, but during earnings week, free yourself up a little bit. Okay. And again, that's all you have to do. And you don't have to sit here and wait for the perfect setup. You don't have to wait for the magical, mythical 618 beast to show its head. By the way, there's nothing more fun than poking fun at some Fibonacci's. I am famous for saying, I have your 618 right here, buddy. Anyway, lots of opportunities will present themselves during these earnings weeks, and you just plan it out, like literally like clockwork, and actually plan it out. Apex earnings week is coming, like next week. Okay, we're going to be rocking next week. Like This doesn't look like much on here, but what you guys are missing is these are hundreds. There's so many earnings announcements that they just put a number up here, like hundreds and hundreds of different earnings announcements. Now, what we're going to be talking about, okay, with our earnings flips. This is not expensive flipping. It's not like flipping a house. Like I just figured I'd throw that up there. It's the strategy itself is going to be incredibly inexpensive, which I'm going to show you. So this is not which again most people think it is. Those are not the droids you're looking for. Um, I'll show you a few examples. So I am limited to show you examples based on predicated on earnings season. So this is back the October earnings season. Then we'll look at like the January earnings season, January into February. But here's a trade. Every $28 invested, I got back 110, 293% return. Okay. Now, when I start bringing these numbers up, I want you guys to know something. You don't have to risk $28. You can literally risk $28. And there's always one in the crowd that go, what about commissions? Commissions are like pretty negligible now. When I first started trading, 25 plus years ago, you had to pay like $10 plus $1.50 a contract. It was like crazy. Now it's like, 60, 65 cents a contract. So yes, plus commissions. But like literally you can place a trade with 28 bucks in your account. So you have to have an account of $2,000. You can do this in an IRA. You can do it in an IRA. Yes, you can do this in an IRA. You can do it in a regular account. You do it in a cash account. Let's get crazy. You can do it in any account you want to do it in. But for 28 bucks, you get a shot and you can make like 110. You're taking just that. I'm going to teach you to take some shots. I'm going to teach you to flip. Okay. 293% return. Here's actually a trade on Microsoft, $91. So Microsoft. Oh, okay. Microsoft, when I did this trade back in October, it was a $415, product, right? That's big boy stuff. I only had to put up 91 bucks to make 250. Apple, $78 invested. I got back 220, the 182% return. Now, there's nothing precluding us from doing like, let's get crazy and do, $780 to get back 2,000, $200. That's fine. I'm showing you here, intentionally showing you the lowest common denominator. By the way, every trade that I'm showing you here, okay, was done exactly like I'm doing it. Let's do it. Like I fire these things off during earnings season. The exact date and time, the execution in, the execution out, everything. Here's another one, an Intel. Ironically, Intel has earnings tonight. I don't know if I'm trading that. We'll look at that one. Okay. And I come to Amazon, $48 invested, got back 215. Okay. By the way, the Intel, nice one, 144%. Okay. You guys ready? Because let's do it. Let's do it. Let's look at the money number. Live in progress. So this is where I'm, supposed to cut to the live screen. We're going to do just that. I'm going to explain exactly what this money number happens to be. So let's start right now with what has earnings this evening. Let's have earnings this evening. Now, I can run you through all kinds of scanners. I've built scanners for this. Okay. My group built the damn scan tab on Thinkorswim. Of course we can scan. We got Intel, we got Google, we got Gilead Sciences. Okay. We got T-Moose, Tractor Supply. Oh, okay. But I got to tell you, I can actually filter this even further down to actually get into a finite scenario of exactly which ones are going to work. I'm actually going to start with Google. And I'm going to tell you why I'm going to do Google. Google is like one of the preeminent products, right? Everybody, knows it. Everybody knows its earnings are coming out. And again, Google is literally this evening. What do you want to be in Google? Before I even show you the strategy, what do you want to be? Bullish or bearish? Okay. Just put in, okay, bull or bear. That's it. Okay. I don't even care if you use like, emoji of a bull or a bear. Okay. It's a bull or a bear. Oh, the bulls are just dominant right now. I like the yes. Okay. The bulls are dominating in here. Okay. It's not even close. By the way, I'm pretty sure that's a bull in there and not a bear, but that is one, Maurice, that is one ugly animal you posted. That reminds me of, remember Married with Children? Take a picture, okay, or take a look at a picture. I'm sorry, that reminded me of that. Okay, back, focus, focus. See, this is what happens when you've been trading some of the volatility for the last 3 weeks and caffeinating heavily. It was an ugly, okay. The Bulls clearly have it. There's not even a question in my mind about what has it and what doesn't have it. So, okay, we're going to go into Google and we're actually going to trade Google. We're going to trade Google bullish. Let me explain exactly what the money number happens to be. Okay. When you're going to trade and you're going to trade in earnings, the preeminent thing about earnings, it's not about what an analyst says. It's not about anything other than purely order flow. Order flow dictates movement. Okay. Options order flow dictates movement. Options order flow dictates movement. Options order flow dictates movement. A lot of people have no idea what order flow even means. Okay. The terminology order flow, and I apologize sometimes for using that terminology because it is kind of a weird term. Like people are not really familiar with the terminology order flow. It's trades. Okay. Let the trades dictate. Let the size of the trades dictate. You know what's cool? Google. Okay. This sucker trades. Now, when I say it trades, Google L, Google L has already traded 378,000 contracts. Okay. Goog, which it's split into two symbols, has traded 193,000. Okay. You think there's enough volume in here to get something done? Think about that for a second. So the order flow inside of Google is nothing less than stupendous at this point. Okay. It's just stupendous. It's phenomenal. What we are going to do is we are going to base our trade, okay, on the distinct order flow. What very few people are aware of is what we term right over here, okay, on the right hand side of the screen. Okay. And I'm actually going to write this stuff up because I want to make sure that everybody really does understand it, right? What we're going to look at over here is called, okay, EM, which stands for what? Expected move. Okay. Expected move. Now, expected move is not the money number. Okay. This expected move over here says plus or minus, okay, $9, okay, and 38 cents. Is it okay if I round? Okay. I know we have a few engineers in here. They start losing it over this. Like, oh, see, it says 38. It says 38. Relax. The expected move is $9.38. What is that number? What did that number derive from? That number is like the line on a football game. Okay. You guys ever seen this? Like a line on a football game. I hate to use like an analogy, like the line on a football game, but like, a team is favored over another team by 3 points. Like literally, there's 1 second to go. They kick a field goal. They win by 3 points. You're like, that is amazing. Okay. And it is. And that happens all the time because the line in the game is like, it's like what we term like handicapping. It's providing, okay, a distinct level of where, okay, the marketplace believes the game is going to settle out, right? So I can't stress this enough, and literally cannot stress this enough. When you start looking at the line of the game, when you look at like an NFL game, a couple of $1 million might be traded in some NFL game. When you look at Google, do you understand how many billions of dollars? Look at the volume just today in these options. 14,000 of these, 13,000 of these, 20,000 of these, 11,000 of these. There's tens of billions of dollars being traded. Really, what the expected move is, the expected move is not some fictitious beast of a 618. It's not a Fibonacci. It's an average. It's an average of your option premiums bought and sold. Okay. So if you buy and sell stuff here and buy and sell stuff here, did you know it averages to $9.38? Like literally it averages out. And it's such a cool thing to look at. By the way, some people are like, I don't have that, man. I'm trading on fidelity. Okay. All you have to do is add the call to the put, add the at the money call to the at the money put. What the market in Google is saying right now is that there's an incredibly high probability, okay, of moving $9.35. Okay. And what happens is there's so much skin in this game, and this is exactly what we're going to show, okay, that it drives Google. So let me kind of script this for a moment for you. Okay. Let's assume for a second that Google was trading right at 160, like right at 160, and your expected move equals plus or minus, okay, let's just make it $10. Is that okay? Right? Expected move is $10. What do I do? Okay. Well, that implies that this underlying should go up $10, which takes us to what? 170, or down $10, which takes us to what? 150. Okay. People want to know what's the money number? That's your money numbers. There's actually two of them. We're only going to select one. We're only going to select one. You go, well, why are we only selecting one? Don't worry, I'm going to get there. Okay. Why is this such an important number? Because what happens if there's enough capital traded in any given product, it's not that we just stay inside of this range. We're actually driven to the edge of the line. It's like literally the line in a football game. As I said to you a moment ago, if a team is favored to win by 3, there's 1 second left in the game. He kicks the field goal. It's good. And you're like, holy crap, how did that happen? Okay, it happened because money is smart. This this money is smarter than you are, smarter than me, smarter than any analyst. Who gives a crap what the analysts say? Now, can we move to some weird esoteric number? Could we move all the way up here to 190? Of course we can. Absolutely. It's statistically less viable, but absolutely it can happen. But the probability of going here or here is high. It's really, really high. And the reason I'm trying to introduce you to this, okay, what if I were to place a very, very small trade right over here? Like, what if I were to actually do what I kind of call this? I call it, let's play pin the tail on the donkey. Okay. And I'll go out and I'll do a trade that I'll literally risk, just bear with me. I'll risk one, okay, in most cases to make 4. Risk 1 to make 4. And you're like, holy crap. Yeah. And you go, so how come you don't do both? We don't do both. The money number, we only need one of them. Why? Because you only really have to be right maybe 1 in 4 times. Okay. At 1 in 4 times, you're breaking even. If you're right 1 in 3 times, you're wildly profitable. What's like crazy about this strategy? I can get to the plate. I can get to the plate. He swings. He strikes out. I swung as hard as I could and I totally struck out. And people are like, you suck, man. Yeah, you know what I do the next day? I get right back up to the plate. You want to know why? Because the night before, it only cost me 30 cents to trade Google. It only cost me 60 cents to trade this one. It only cost me 50 cents to trade that one. I'll get right back up to the plate. I'll strike out 4 times in a row, hit 2, home run. I'm profitable. You got to understand, okay? I'm just playing pin the tail on the donkey, okay? The donkey is Google right now. And it's so the strategy, okay, super easy. The strategy ain't the trade. The strategy is the easy part. People are like, oh man, that sounds like this trade called a butterfly. It is a butterfly. Okay. That part's easy. The money number is the critical part. Okay. Being able to assess where to trade, when to trade, how to trade it. Okay. How did I know to actually use? The April 25th, there's only one day to go to expiration. Okay. I knew that the expected move was this, but how did I even arrive at Google? Google's an easy one because you know the liquidity's there. It's easy. Okay. There were a lot of pieces of criteria that went into deriving what to do here specifically in Google. But with that being said, okay, let's go in here. Let's actually talk a little bit about Google because like I'm thinking of like, I could trade some Google. So let's get down to the specifics of the mathematics. Okay. By the way, we're going to get into higher math over here. So I'm going to bring up a calculator. Ready for higher math? We have $158 stock. Okay. And 94 cents. Okay. Add $9. Okay. And 32 cents to it comes out to 168. Okay. 26. Anybody? 168.26. That's the money number. Wait, what did you do? Okay, I just took the underlying price and added the expected move. You go, why are you bullish? I don't know. You told me to be bullish. But what if you're wrong? We'll lose. It's okay to lose. Okay. Want to know why it's okay to lose? Because trade's going to cost me next to nothing in the first place. Like, it's okay to lose. We're going to take a shot. Okay. Now let's come up here and let's look. Because a moment ago, I just brought up the calculator and the calculator said 168 and change. There is no 168 and change. Well, sometimes you got to just kind of round a little bit. Again, if I add this to this and you're like, but it's 168. So can I round to 167 half or should I go to 170? You guys tell me. Okay. let's get crazy. What should I do? The marketplace is not closed yet. Maybe I should go to 170. Maybe I should go to 170. Goodbye. Deep and wide. 1 month. Two strike butterfly. $5 wide butterfly. Okay. I'm down with this because I think the market's actually rallying. Fire. Okay. All right. Let's see if we actually fill. All right. So we're going to cancel replace the order because I'm going to tell you right now, this butterfly is probably worth, I think I can fill it for 64 cents. I mean, that's reasonable. I'm going to try to fill it for 63 cents, but I think I can get filled for 64. In fact, I know I can fill for like 64. Okay. So I am a butterfly connoisseur. Okay. So but I do want to get executed in here. It's going to be difficult. By the way, only when I'm live like this is it ever difficult. Okay. It's funny. I'm going to pay a penny more. All right. He scores. And I want you guys to realize something. The trade I just placed, I have 65 cents at risk. So if you do one contract, because options trading contracts, that's it. You have $65 at risk to make what? $5 wide butterfly. Okay. $5 wide butterfly. So here you go. I altered this one a little bit because I'm feeling a little frisky to the upside right now. The marketplace kind of rallying. Let's do it. Okay. So everybody's going to ask me the question, what if I'm wrong? Okay. So what? What am I going to lose? 65 cents. Okay. It can happen. Like it could happen. And it's okay if it happens. Why? Because I only have 65 cents at risk. Can you imagine if I did? Just bear with me. Let's say I did four of these. One hits. I'm not going to make the full $5. But if I risk 65 cents, okay, I'm going to go back to my slide deck for a second. If I risk 65 cents, this is on DraftKings, all of a sudden 46 cents makes $1.30. It's not going to take a whole lot of these, okay, to knock it out of the freaking ballpark. You guys get what I'm saying? Like, you're not going to have to hit that many of them. See, most people are looking for like, I want a high probability strategy. No, I have a low probability strategy. The returns are unfreaking fathomable when you hit, and you only got to hit 1 in 4. At 1 in 3, you're wildly profitable. So what do? Well, earnings are in a couple of products tonight. Let's get crazy. Let's trade another one. Does that make sense to everybody? Okay. And again, I have no problem. Like people say, I want to do me that trade. Create duplicate order. I'm going to copy it. Now, you do this on your own accord. Okay. I am not pushing the button in anybody's accounts, but I am definitely pasting the trade into the chat room because I would never trade something that I wouldn't say like everybody can do this and okay, everybody can do this. So, fire at will. We'll see if this one works. And I'm going to tell you right now, I can't just place one trade. I can't because, you know, may the odds be with you. Well, this is not going to give me good odds. Okay. Does he say it's like Han Solo? Don't ever tell me the odds. I love that part. C3PO was actually calculating the odds of making it through the asteroid. You guys have no idea what I'm talking about. Come on. Don't ever tell me the odds. All right. But it's a low probability, but man, you make it and it's freaking huge. You realize if this thing falls right at 170, you can make as much as $2 or $3. Okay. You can make as much as $2 or $3 in here. That is big boy. That's gonna hit. It's gonna get hit nicely. By the way, I love this. Somebody's like, I got filled for 63 cents. Son of a okay. By the way, I would not do both a bullish and bearish. I wouldn't do it. There's actually a detailed reason why I'm not getting into that today, but I can sit here and mathematically proof only do one side or the other. Shall we move on? What else has earnings tonight? Okay. I was looking at Intel earlier. Okay. I shied away from Intel, and I'm going to tell you exactly why. It only had a $1.73 expected move. Okay. I don't care whether you want to be bullish or bearish, it's a $1.73 expected move. This thing was like it's trading in the mud. Trading in the mud. Like I mean, I've traded Intel, and I actually have showed you a moment ago some profitable trades in Intel. Okay, but I don't want to get caught up in it. I found another couple that are pretty good in here. Schlumberger. I can't say it, but I can trade it. Okay, Schlumberger. So in Schlumberger, all right. What do you guys want to be in here? You want to be bullish? You want to be bearish? Huh? Let's get a little crazy. Okay, Schlumberger, bullish or bearish? What do you guys think? Okay, I'm just asking. Okay, I'm taking a consensus right now. By the way, interestingly enough, on this one, in all seriousness, I didn't. I looked at the Google trade earlier. I really didn't look at the Schlumberger trade. Okay. Um, yeah, you know what? I like what somebody said. Need to see the chart. Why? What's going to be here? Okay. Now, you know what? Just for that, now I'm doing bearish. I'm doing bearish. I'm going to do it. Okay. Lumberjay. I like it. Um, I like that. Somebody said bear all the way. Cool. I'm down for that. So the expected move in here. Oh, this one's also like it's really nominal. Okay. It's a very, very nominal expected move. But okay, what's different is this is like a $35 stock. Can I actually even get away with doing this? And again, I have priced a couple of these. So the way I would look at this, and again, I don't love, like I said, tonight is just like kind of kicking off the big portion of the earnings season. But here we have what, 34, basically 80 minus, okay, a dollar, we'll say 36, 33 and change. Okay. We could go down to like the 33 strike. Okay. Literally go down to the 33 strike by deep and wide. 1 3 strike, just bear with me because I may have to actually mess around with this a little bit. Okay. And let's see if it actually let's see if this one I can actually make it kind of fit in here. This will play. Okay. I don't love it, but this one would play right now for 54 cents. And this one, I mean, the stock goes down minimally. The most it can possibly make is $2. Okay. And you got 54 cents at risk. So if you notice, you're like, well, why is this one so expensive? Because the probability of it hitting, okay, the probability of it hitting is actually quite high. But, the maximum profitability, so you guys could see at 33, okay, would be right in this neighborhood. I mean, literally right in this neighborhood here. Okay, that'd be like max profitability. And I don't know who am I to actually, say no. Okay, I'll fire one, see actually how it plays. Now, if these trades are what we term in the money tomorrow, you have to close them. Okay, you absolutely have to close this tomorrow if it's what we term in the money. I'm not going to overpay for this trade. See, I filled right at 52 cents. Pretty good fill on that one. Copy this one, kind of paste it in here. And you guys are welcome to see this trade as well. Okay. Um, it's this is again just a shot to the downside. And you go, well, what if we don't hit any of them? It's okay. Like I've struck out three times in a row. That's again, if you're going to play the game, you got to keep getting up to the plate. But if you strike out, you lose 52 cents, $52. Okay, $52. But on this trade, easily you can make 140% like that. All you have to do is come down to 33 and sit there in the morning, and we're in. Okay, we're in on that one, and it works. Okay, what else do we have? What else do we have in terms of earnings? Like you guys tell me. Okay, listen, I'm playing along over here. I've got one more that I actually wrote down. Okay, that I think is interesting. ABBVVV. ABBVVV. Anyway, I got to get out more often. Um, this, okay, could definitely work. By the way, I looked at T-Mobile. Okay, here, I'm going to compare the two. So if you take a look, right, there's a couple thousand contracts trading in here that offer spreads, look pretty decent. Okay, T-Moose. So what didn't I like in T-Moose? Contract size is light. Like there's like not a lot of umph behind it. So in T-Mobile, I got 15,000 contracts actually trading. Over here, okay, in ABBBBBB, I have 42,000 contracts, not even close. Okay. What do I want here? I don't give a crap what you think about the stock. I don't give a crap what anybody thinks about the stock. The one thing I do care about, order flow. The more order flow there is, the higher probability. The more order flow there is, the higher the probability the line in the game is going to be right. Okay. If you bet on a football game, some high school football game that no one bets on, you don't know what's going to happen. Okay. But if you bet on an NFL game that there's $30 million in the line, everybody kind of knows. Like those lines in the NFL games are really, really good because everybody kind of has a good feel for everybody on the team. Some high school game, you're like, okay, here, this ain't high school. This one, okay, this is NFL because it's trading 40,000 plus contracts in here. That crap, That helps. 42,000 contracts tells me, okay, a lot about the product. I guess the next one in here, though, okay, the next one in here, would you want to be bullish or bearish in here? Okay, what is it in this one? Okay, bullish or bearish in here? Um, uh, and I could totally do either way. Okay, I could totally do it either way. This one's actually a pretty fair market on both bull and bear. All right, I'll tell you what, I'll price the bullish one here. Bullish on Google. Okay. Bullish on Google. And then we had another one. Obviously, I'm looking at my order flow, bearish on Schlumberger. Okay. And again, maybe we strike out on all three. Let's get crazy. But this is earnings. So it's a $180 product, the $9 expected move. Okay. So what's the money number? And I like calling it the money number because like really it's like the money line. Like it's kind of a cool like phrase for it. Plus what is it? We'll just call this $9 equals, okay, 189.30. Well, if it's 189.30, like I'm just going to round up to the 190s, right? Makes sense. Come up here, buy deep and wide, 1 month, two strike, butterfly. Dun dun dun. Wait, you notice this butterfly looks exactly like the Google butterfly, looks exactly like the other butterflies in Schlumberger, but I like me a $5 wide butterfly because it's a window. Okay. It's the other one's like Schlumberger is a little tight. Okay, this one's got a window of opportunity. So when I initially come in here and send this trade off, okay, I don't think I'm going to fill at that price, but I'm going to tell you right now, I like to probe price. I like to know where I'm going to get filled. I know where I can get filled, but market making firms can sometimes surprise you. They really can. This trade should fill between 67 and 68 cents. Okay, but I'm going to take another shot at 66 cents. And I filled. So right there, that's why you actually take a shot. Take a shot, see if you can fill. Filling it all kinds of good stuff in here today. I mean, these trades, okay, just 3 trades, that's it, okay? I'll stop there. When I say I stop there, all right, so puts on 3 trades. Now what do I do? Okay, I don't know. See you tomorrow morning. Who cares about what the earnings are tonight? Google could rally huge tonight. It went over, and then it comes right back to it during the conference call. You're like, I want you to think about something. Okay. 3 trades have been placed. What do I have at risk? $66, $52, $65. Try to make the allocations perfect and even. Okay. But in this particular case, what do I really have at risk? Less than $200 with 3 trades. One trade can make more than that by far. I can easily make $200-300 on any one of those trades. Schlumberger, I can't make as much, but the probability of me hitting is much higher, which is kind of cool, right? So all I'm doing is just, I'm going to sit here. I'm going to take my shots. I want you guys to remember the only one that I really selected was this ABBV, meaning in terms of the bullish trade. The other ones, everybody was bearish on Schlumberger. They were bullish on Google. I'll blame those on you. Okay. The ABBV, that one's all me. That one's all me. We're going to roll the dice. We're actually going to see what's going to happen. Can you imagine, though, doing this during earnings? I don't have more than $200 at risk. Now, if I wanted to amp this up, I could have $2,000 at risk. $2,000 at risk. Any one trade can hit. It can be a $4,000 or $5,000 winner. Any one of those trades can hit. Okay. But the irony is, you're like, what if I lose on this one and this one, but hit on this one? Then great. Then you're profitable overnight. Okay. People, this is what it's about. These are all live earnings flips alerts. This is DraftKings. Kind of ironic that I did it on DraftKings. This is actually back, okay, in the November timeframe, $46 invested, I got back 130. Okay. This is not similar to a trade I just did, 183% return. Here's 118% return and take 2 interactive. Here is what? Delta. Okay. The only time you're a winner on Delta is when you actually trade what? Earnings flips. The only time you could possibly be a winner on Delta, okay, would be in an earnings flips. Okay. Here's what? Taiwan Semiconductor, 225% return. I mean, everyone, like, look, I only have to hit this one trade. Even if I took 3 or 4 shots that night, as long as Taiwan Semiconductor hit, I'm in. By the way, I remember the night that I did the Taiwan Semiconductor trade because I hit multiple trades the same freaking day. I hit Taiwan Semiconductor and I hit United Healthcare. United Healthcare, I hit for a 366% return. $30 invested, got back 140. Okay. Caterpillar, hit this one, 195% return. Here's Hood. Now we're getting a little bit more, like again, the earnings seasons kind of come and go. And you'll see like January, I was trading. Okay. And all of a sudden I'd come out here to like Robinhood, 150% return. Okay. Qualcomm, over $54 invested. I got back 110, 104% return. Eli Lilly, $47 invested. I got back 230. This is a 389% return. We're getting a little bit more recent. Okay. Cisco, $64 invested. I got back 175, 173% return. Okay. Coin, $29 invested. I got back 39. This is a 35% return. But I got to tell you, this is actually what I call a mulligan. I put a mulligan in here, and people go, how come you don't show the losing trades? Okay. People, I'm going to tell you right now, I got plenty of losing trades. I am more than comfortable in saying I have plenty of losing trades. You trade, okay, with me. You trade consistently with me. You spend two nights a week. That's it. I only trade this stuff on Wednesday or Thursdays. That is it. 2 nights a week. Okay. During earnings season, I'll do 2 or 3 or even 4 trades in those nights, just like I did now, right? I just did 3 trades. That's it. You're done. Wait until tomorrow morning, see how you turn out. Don't even bother looking at it tonight. Tonight, you'll be like, okay. And then the CEO comes out and screws you up, and the CFO comes out and screws you up. Don't worry about it. See where we are tomorrow. $29 invested, get back like, hey, that's a mulligan. I like it. Here's Roku. Okay. $43 invested, got back 148, 244% return. Okay. Here's actually one. This is like one of the first ones that I hit this earnings season. Okay. Ironically, is on Schwab. I got to tell you, this earnings season, I started off timid. And the reason I started off timid, we were in such extreme volatility. Everything else kind of fell quiet. Okay. Letting things kind of calm down. Now, okay, yesterday, today, now I'm taking shots. Why? Things are kind of calming down a little bit. The volatility is abating to some degree, but markets rallying over here, things are normalizing. $65 invested, I got back 145 to 123% return. I'm telling you, this, if you're going to trade earnings, you take shots. That's what flips is about. You take shots. Look, every trader, you need that earnings edge. Earnings strategy is the bedrock of trading arson. Okay. Because earnings season, people have tried tons of stuff. But this has got repeatable opportunities. It's rinse and repeat. By the way, there's nothing more gratifying than going out, okay, doing 3 trades. Sometimes we'll hit 2, sometimes we'll hit 1. Okay. Last night, I struck out on 4, but one of them just came back. Okay. All I need is the one trade to come back from last night, and all of a sudden, he's a winner. He shoots, he scores. Okay. It's like hitting a grand slam home run. You just rinse and repeat each earnings season. And by the way, there's times where like off earnings season, meaning like, you know, Nvidia releases at a weird time. Costco's a weird time. Walmart's a weird time. You can trade this and only this. Okay. But trade earnings for a lifetime using these flips. Okay. It's a definitive system for trading earnings. Introducing earnings flips alerts. Earnings flips alerts. We charge $1,000 for the entire year. Okay. What do you get with earnings flips alerts? Well, okay, you get the earnings flips masterclass, which explains, okay, all of the criteria involved. There are going to be people that never listen to the masterclass, and I'll come back to the masterclass in a moment. Okay, each earnings season, a minimum of 15 trades. Earnings season just kicked off. Okay, I'm almost over that level already. Like, you know, I mean, between yesterday and today, I've already got 7 trades under my belt. I actually did the Schwab trade too and a couple other ones. Okay. I'm saying minimum of 15 trades per earnings season. Okay. More like 30 or 40, because I have to tell you guys, there are strategies that I trade, and then there are strategies that I love to trade. If you're not picking up on this, okay, I am into earnings flips. Like, love this. I absolutely love it because nothing is more like in your face and like, you know, boom, you either hit it the next morning. Okay. You're a winner or you're a loser. And I love it because you get up to the plate, you know, 6, 7, 8 times in a week. You only have to hit 2 balls, okay? And it's out of the park and you're a winner on the week. I mean, you can literally tee up, and if you want to use $2,000 or $3,000 of capital, see how you do after a couple of weeks. Serious. Just use some capital. Okay, so you have to do after a couple of weeks, and you're going to see positive expected returns. It's not about one occurrence or one bad night. Okay, it's about sequentially. After 15 trades, tell me how you're doing. So if you look at this, we have a class, and the class is wildly detailed about exactly how the strategy works, exactly the times to trade, so that you can actually create your own trades. Like I want you to be able to create your own trades. Okay, but if you don't, follow all mine. So I'm only going to do, as I said, I'll do 30 or 40 trades. I put in here, it's a minimum of 15 trades per earnings season because I can't handicap. Maybe the volatility spikes tonight and I'll be like, oh, back off, back off. That's okay. Look, this is for a full year. This is not one quarter. Okay. Think about any trades. At minimum, you're getting 60 trades a year. More like probably 120, 130 trades a year that are going to come to you. Okay. It's one of the most active things that I do. And when you start breaking that down on a per trade basis, okay, cost is just completely nominal in here. Now, the earnings flips alerts. When do they come out? They're coming out right now. They usually come out on a Wednesday or Thursday with 1 hour to go to the cash close. So we're just like fire them out, fire them out, fire them out. Right now, we're firing out. We're actually putting these trades are being put on. Okay, right now for our earnings flips, they're being put on. Okay, so you guys get to put them on. This is a first one's free kind of evening for you. Quarterly pre-earnings huddle. Okay, this is a $500 value. This pre-earnings huddle, and I'm actually going to show you in just a moment. This is coming up next week. This is literally coming up. It's coming up Tuesday next week. Okay, Tuesday next week is when the earnings huddle. That is the 29th at 8 a.m. Get a pen, write it down. I'm going to show you again in a moment. So we're going to spend about an hour to 90 minutes, okay, preempting before the full swing earnings season. Right now, we're just, Don's getting warmed up. Okay. I'm just getting warmed up. Big earnings next week and the week after. That's when it's, winner, winner, chicken dinner. Remember though, we only trade what days? Okay. You tell me what days, because I mentioned it. We're not going to trade every single day because it doesn't, that's not the strategy. Strategy here, 2 days a week, and that's it. Okay. That's it. 2 days a week, Wednesday and a Thursday. You're going to get an earnings flip watch list. It's about 100 instruments that we're actually watching, okay, with updates. And of course, how to place your first trade. As I said, there is incredible support team actually to this one. So it's myself, Blake, okay, Blake Young actually helps support, Todd Sweet, Brandon Chapman. All three of us, okay, their three are supporting me, but those three are actually feeding me, okay, details about what is actually in play and what's not. One of the most critical things in what we do with earnings flips is filtering through, okay, a large spectrum of underlyings to come up with like why these three stocks tonight. Okay, why those three stocks? Because, well, we factored in they were the highest probability based on some of the order flow out there. Now, with this, okay, there's a 30-day money back guarantee. If you're not satisfied in the next 30 days, get your money back, full refund. We do this. We want people that want to be here, that want to trade with us. By the way, there's no stipulations. Okay. The 30-day money back guarantee has no stipulations whatsoever. There are none, no excuses, no questions. Just email us. You don't have to call us. You don't have to give blood. Okay. Look, I get it. Life sometimes gets in the way. Right? I want to make sure that everybody likes the strategy that you're, embarking upon. That's why, we're hosting this earnings, session right now because we're about to come into, full swing earnings, and you'll know in the next 30 days. I promise you, you'll know in the next 30 days, okay, whether it's for you. And I always say, you don't judge me on one or two nights. Okay. You got to go through and you actually got to trade with me a bit and you got to trade, right? So this is not about like, it's paper trading. Execute, execute, execute. Fire off a couple of trades with us. Okay. Make sure if it's for you. If it's not, 30-day money back guarantee on here. Again, we want people that want to be here. I always throw that out though to people so that you're like, I have an out just in case. You do. Okay. You won't want to. Everybody loves this. I absolutely love earnings flips. Next, earnings flips masterclass. Now, I filmed an entire class specifically on the strategy. It's a 3-hour class. Okay. It's in the can. It's ready to go. You'll sign up now. Okay. And literally, you can start viewing that immediately. like you want to start doing it, you enroll. Speaking of enroll, the I think we dropped a link in there. It's theotrade.com/flip. Theotrade.com/flip. And I wanted to pull this up for a second. This is actually that page, theotrade.com/flip. And I see we put the link in there. As you scroll to the bottom of the page, there's already questions coming in here, okay, on this particular front. I'm going to answer a few of them. First of all, information, put a valid email address, please. An email address. Like I know that like Apple kind of hides your email address. Put your real email address in there. We are going to text, push notification, and email all the trades. So we just click a button and it fires to all three. Make sure it's a valid email. In addition, valid phone number. Okay. Put a valid phone number in there. Now I know some people are like, they're like, oh, I'm in Thailand, man. That's not going to work. Okay. That's why we do email and push. What's push notification? Okay. That's when the little banner pops up in the top of Mr. Phone and says, hey, we're trading. Okay. Um, Easy enough. By the way, you can also log directly into TheoTrade. Okay. There's an entire earnings flip room where you can communicate and talk to other traders in the flips room. And the reason I say this is like a flips room is when are the trades coming out? Wednesday and Thursday afternoon. If you want, just log into the flips room and Wednesday and Thursday afternoon when it's like prime time earnings season. Okay. And we're going. We're going. Like, and it's going to come out anywhere from like 90 minutes to like an hour to the close. I always give people plenty of time to be able to get filled on these trades. Like I want to make sure everybody gets filled. Put a valid phone number, put a valid email address. By the way, payment, you can pay any way you want. Like we're fine with it. As I said, there's a money back guarantee on it, and we even put that on here as well. I always want to make sure everybody's like comfortable with that. We'll even throw a phone number up here momentarily. And the reason we put a phone number, there are people that just don't like entering stuff in online, and I get it. Okay, I get it. More than happy to take a call from you. Okay, and I'll put the number up here in a minute. Again, the web address to that is theotrade.com/flip. Okay, so in the actual masterclass for 3 hours, like what do you describe? I get into the very critical nuances of what I just talked about. Like I get into why I actually will select Google, why I select this over this or not Intel, but I did Schlumberger. Like, why do I do that? Hmm. I get into all the nuances of how to actually filter through. Okay. If you start with 100 stocks and you start sifting stuff off, the amount of order flow is one of the most critical pieces of criteria in here. But even more importantly, how to place the trade and when to place the trade. Why did I do $5 wide flies, not $2 wide flies? All of that. Okay. Like you got to think there's a lot of little nuances. You know, somebody actually said to me, they go, what do I do after a year? Anything you want. You can trade them yourself. Okay. Or continue. That's up to you. I actually, appreciate that one. You can do anything you want because you've got the class. You'll know how to do it. It's a class at $500 value. Then we actually come into the earnings flips themselves. 15 high conviction trades per earnings season texted and emailed to you, right? So this is per earnings season. Obviously, there's 4 earnings seasons. So it's a minimum of 60 trades. But as I said to you, it's 100 to 120 trades easily. Okay. We're just coming into like the earnings season kind of kicks off with some of the banks. Funny thing is, though, the banks are not like usually the great trades. The good trades are some of the tech stocks and so forth. Some of the crap we're actually trading like next week will get good. Some meta, that's when stuff starts to really get good. Anyway, this is one of the preeminent reasons that people obviously hop in here for the earnings flip is because we provide this many alerts in here. Onward. This is an earnings flips pre-earnings huddle. So this is live Tuesday, okay, April 29th at 8 a.m. Pacific time. Why so early? Because I drink my coffee early. It's a second dose of caffeine. Second dose. Okay. This is late in the afternoon. But we're gonna do a huddle. And what we basically do in the huddle, and just talk about where we're headed. So the cool thing about this strategy is we already know predominantly what we're going to trade days in advance. Okay. Most of the time we know weeks in advance, but this is a weird market, right? The market's in chaos right now. So we will further filter, okay, even the day of to make sure that the order flow is absolutely there, right? So that's important to me. Blake and myself, okay, will be on here. By the way, for those of you that do not know Blake Young, okay, I've actually known him for about 20 years. He worked way back, Thinkorswim days, obviously TD Ameritrade days. When I left TD Ameritrade, I grabbed Blake, I grabbed Brandon, I grabbed, Jeff Bierman. Everybody was looking for a way out. Okay. They found it. It was TheoTrade. We launched TheoTrade in 2016. I had a 5-year lockup clause, and then I had to actually take time off, and then I was allowed to come back to work. So it's a good thing I came back to doing something because my wife, like, I would not have been married had I actually just hung it up in 2015. I spent 3 weeks and my wife was like, "You got to go back to work. This is not going to work." There's TheoTrade. Anyway, um, everything that we do here at TheoTrade is recorded. Absolutely, this is recorded. Not only is it recorded, if you have questions after, like you listen to the recording, email us. It's okay. Like you can email us. Like, and you'll be surprised. I answer emails. Like I do usually about 2 hours of emails right now. The last couple of weeks, I have more like 3 hours a day of emails. Okay, I don't mind. I just sit on my iPad and like chill, answer some emails and so forth. It's all pretty straightforward stuff. By the way, there's nothing that I haven't seen. Okay. Like a doctor of trading, I've seen that before. Like you're not going to shock me with anything, okay, that you've done over the last couple of weeks. I was like, wow, you got yourself into an interesting position. This earnings huddle though, I like doing it because it's just talking about, hey, the last couple of weeks got knocked around, things are starting to mellow out. Let's do this. Let's do this. Okay. By the way, a couple of names as individuals are enrolling here. I'm just gonna let you guys know and confirm because I can see you obviously enrolling. Takes me about 5, maybe 7 minutes before I see your enrollment come through. But Tony J from Georgia, um, Joe B from Arizona, Ronald B from Canada, CJC from Florida, Rob B from California, Lewis R from New Jersey, Ron W from Ohio, Alexander P from Florida, Ish J from California, um, Priamsil G from Czech Republic, Scott H from Ohio. By the way, in the Czech Republic, I'm curious as to which brokerage firm. I believe in Czech Republic you can even use Tasty. Okay, but if you're overseas and so forth, you can always shoot us an email. We'll find you a decent brokerage firm. But I am actually curious what brokerage firm in there. Okay, fantastic. So new guy. Okay. All right, so that's the earnings huddle. It's coming up this Tuesday. So obviously, we want people enrolled, want you ready, and want you in the huddle as early as Tuesday. Again, if you can't make it live, it's absolutely recorded. Earnings flip watch list. Okay, this is usually a watch list from 80 to 100 stocks. We update it quarterly. We just basically sift through, and we have this, scanning criteria. Hits the scanning criteria, we'll give you a watch list. These are like the 80 or 100 stocks, okay, that are likely to make kind of the grade. So remember, in each earnings season, I might do, well, I always say 15, but I usually do like 30 or 40 trades. Okay. Those trades come from this watch list that we provide to you. And of course, I already have a prefab video here, how to walk you through your first trade. So I'll walk you through how to execute your first trade. It's very, very straightforward. Okay. If you need additional help, okay, a gentleman by the name of Todd Sweet, who was a market maker for many, many years in Chicago. Todd actually can help walk you through the trades. Like one thing we want you guys to have here is support. Like we're not gonna, leave you on your own over here. If you need, okay, a little bit more help in getting started in trading any of this stuff, okay, that's what we're here for. So to kind of review everything, earnings slips alerts, okay, it's $9.95 for the year. We give you obviously the master class, which is a $500 value. The earnings flips alerts, which is about a $4,800 value. Again, the number of trades that we send out it's pretty plentiful out of this one. Like if you look at like an alert service, we're going out there 15 trades per season, so that's 60 trades. There's more trades than there are weeks. And as I said to you, I'm likely to do a lot more than 15 trades. Okay. By the way, the trade absolutely includes the entrance and the exit. Every single trade, the entrance and the exit. Okay. So tomorrow morning, those of you that place this trade, okay, if you are enrolled today in flips tomorrow morning, okay, you're actually going to get the exit. All right. By the way, if you enroll today, you don't get the exit tomorrow, contact us because you need to get the exit. But you can always cruise over to the flips room. There's an actual earnings flip room that we use. Okay. So the exit strategies just do the exact opposite. We'll cover that a little bit more in the Q&A over here. So obviously you get the earnings flips alerts, the quarterly pre-earnings huddle that includes, again, myself and Blake, the earnings flip watch list, and of course, how to place your first trade with us here at TheoTrade. I reiterate once again, okay? There's a 30-day money back guarantee. We give that 30-day money back guarantee the first 50 people to enroll today. Why do we do that? To incentivize you to enroll today. Of course, we want you guys to enroll today and we want to incentivize you to do so. So we give you a 30-day money back guarantee. Trade with us. Come trade with us. I mean, the retail value is almost $6,000. We do it today for $9.95, but again, it has a 30-day money back guarantee. It's theotrade.com/flip. Okay. All right. With that, we're here to help. Never, ever hesitate, okay? Email us. Never hesitate to email us. Like if you need us, email us. It's probably one of the easiest ways to get a hold of us, people call, but we only have one, maybe two people answering phones, okay? But if you need us, you email us, we get back to you within 24 hours, period. I am very hard on our crew about responding to emails. And I let everybody know that right now. Very, very hard on the guys. Like, if they don't respond to you in a day, I want to know about it at that point because I try to turn those emails around. Well, you can email us and you can ask trade related questions. I'll tell you right now, that alone is worth $1,000 a year. The trade related questions too doesn't have to necessarily pertain to flips. Okay. Thousands of people are clientele now, TheoTrade. There's no one else to talk to in this industry. Like, you remember like years ago, it was like they always had the slogan, talk to Chuck. Anybody remember that? Okay. Anybody remember that? Like it was a slogan from Charles Schwab years ago, talk to Chuck. Let me tell you something right now. Okay. Chuck doesn't want to talk to you anymore. Okay. Chuck literally doesn't want to talk to you anymore. And it's unfortunate. There's no one else to talk to in the industry. So, we kind of pride ourselves like, look, I've held every brokerage license imaginable. Okay, Jeff Bierman's held every license imaginable. I had 768 people under my Series 24 when I left TD Ameritrade years ago. We know how to answer emails and answer trade related questions, and that's cool with us. Like I don't mind it at all. And if anything, I'm still learning from things that other clients are doing. Like that's how we know what retail traders are doing so well. It keeps us in the know when you're constantly emailing us. So it's kind of a nice like relationship in there. As I said earlier, if you need us, call us 623-244-5657. Again, 623-244-5657. Somebody was asking for the link in there again. So by all means, Jeff can drop that link back in there for you. And again, it's theotrade.com/flip. And again, you can call us. There's a team waiting to answer the phone, no problem. Or you can chat in right now and we can communicate directly through this. Okay. We record everything here, literally every spoken word. The big week in earnings, it's coming. The truth is the next 2 weeks are really big. Next week, though, is rocking towards the end of the week. I like Meta. Okay. I have this problem though with Meta. Every time I want to trade it, I want to do it bearish. No fan of Facebook, people. Okay. I know there's Instagram, but I'm no fan of Facebook. TheoTrade.com/flip. Again, whenever I think of this strategy, okay, like literally when I think of this strategy, it's just like the only thing that you can do that's like prefabricated. Like it's just when I say opportunity like clockwork, you start looking at this, you're planned really months in advance. I was showing you January. This is January, okay, and this is obviously like in April. Because what happens is in certain months, okay, it's just like, you can see it coming. Like, look at tonight. I mean, tonight, when I was talking about like Apex week, there's 205 earnings. But like next week, I kind of call it like Apex week. There's 312. There's, 323. There's 56 on like, it's crazy on a Friday. And then, by the way, on a Saturday, Only Warren Buffett does this. Okay. You got to be as cool as Warren Buffett to release earnings on a Saturday. Okay. Where's the earnings call coming from? Probably like a Dairy Queen. Okay. He's just chilling up there. Like, let's do the earnings call from a Dairy Queen this time. All right. A little bit of Q&A over here. By the way, a few more names. I want to read it off. Thomas B. from Maine. Okay. Daniela W. from Minnesota. Don W. from Hawaii. Um, Leon F. from Pennsylvania. Eric S. from Florida. By the way, if you're in Hawaii, the trade obviously like starts kind of early in the morning there. I have spent ample time trading from the Hawaiian Islands, ample time. And when I trade there, I'm like, it's like 3:30 in the morning. I was like going to bed like 7 o'clock at night whenever I'm in Hawaii. So I live between Arizona right now and the Virgin Islands. And the Virgin Islands has the other problem. The Virgin Islands isn't in the Atlantic time zone. So we are actually an hour part of the year in the Virgin Islands. We're an hour past Eastern time. So the market doesn't even open until 10:30 in the morning. It's weird. Like I'm like having lunch, when the market's opening out there. All right. A couple things I wanted to cover in here. Um, Generalized questions. People always ask me, what do I need to get started? Okay. I used to say a laptop and an internet connection, but the truth is, get a phone. You can actually trade everything right now off of a mobile device, like literally. Just to show you guys the alerts as they come in over here. Okay. Like I'm getting text messages. Oh, I'm getting text messages in here, and I can then click, drop right into the trades, and then I just go into my trading application. Okay. I mean, I just literally like, pop into my trading application and I'm ready to roll. Like I can pretty much just, fire all the trades directly off of mobile. Okay. If you're, comfortable, if you can actually see your phone, which as I get older, that's getting harder and harder. Okay. I'm almost to the point where I have to get the iPhone Max. Okay. Not because it's cooler, but because I'm blind. The iPhone Max, so I have to like hold it across from the screen. Anybody else have that problem? Okay. No glasses, no glasses. No wrong. Anyway, we have everything you're going to need to get started. Like that's important to me too. Like from the absolute novice to the most extreme traders, we have everything you're going to need. If you need something, like let us know. Don't worry about like all the earnings calendars and stuff. We'll get to that. Okay. We get to that. Glasses. Who needs glasses? Okay. I'm not ready to make that kind of commitment in here. Um, Look, this is annual access for earnings flips alerts. Okay. It's annual access. We don't like, do crazy like renewals and stuff. Like if you want to do it again and after a year, let us know. Okay. It's great. Email us anytime, receive a response within 24 hours, including trade related questions. Talked about that pretty much at nauseum, but it's important to me. Variations of all the trades that we're doing can be available inside of an IRA. So variations of the trades can be done inside of an IRA. Important to know that if your brokerage firm is giving you a tough time, we here at TheoTrade have a relationship with several major broker dealers. So Thinkorswim, I think most people are probably familiar with Thinkorswim. Okay, Thinkorswim and the executive team at Thinkorswim, okay, scattered and run all the brokerage firms right now in the United States. So one of the executives at Thinkorswim runs Hasty Trade. Okay, his name is JJ Kinahan. It's not Tom Sauce. Now Tom still works there, but and Tom actually owns a huge portion of that company. But JJ Kinahan runs Tasty. Obviously, I'm still friends at Schwab. Very close friend at E-Trade. It's Mary Ryan, and she actually runs E-Trade. And she started working at Thinkorswim when she was 18 years old. Now she's a managing director, okay, of like Morgan Stanley and huge E-Trade division, which is awesome. Steve Quirk actually runs Robinhood. Okay, he's actually basically runs all of Robinhood day-to-day operations over there. So we are very, very well situated in the brokerage space. We can help you out with different broker dealers out there. Okay, look, that's never going to be a problem with the broker dealer. You can email us. We'll give you a couple of like suggestions of where you might want to go. Remember, there are 50 riskless trade spots available today. Okay. We want people that want to trade. It's theotrade.com/flip. Get results, take action, enroll for TheoTrade now. Last time I'll actually pop this page up over here. Again, Feel free to give us a call if you need anything whatsoever. Remember, there's a 30-day money back guarantee on this. And again, enroll whichever one works for you. TheoTrade.com/flip. I'm going to sit in here and answer questions for a few minutes. I've gone over my time over here, but we are more than happy to answer some more questions for you guys live inside of the chat room. I want to thank each and every one of you for attending today. The trades, we will exit the trades, okay, tomorrow. You do, if the trade is in the money, you do need to exit it. Okay. Those of you, as you're enrolling for flips today, okay, we will actually shoot you out a message when we're exiting the trade. If the trade's out of the money, it's a total miss. You don't have to worry about exiting it. There's only commissions predominantly on the way in. Some of the trades, have no commissions on the way out, which is important to us. We'll explain all of it though. Thanks everybody for tuning in today. Any questions? You here in the chat room. Bye bye.